The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Happy Friday and welcome to Squawk Box. Here are your headlines today. The S&P 500 claws back all of its August losses after upbeat retail and jobless data reassures markets on the health of the American consumer. Japan's Nikkei lines up its best trading week in more than 4 years, leading broad gains in Asian equities after that strong lead from the United States.
Earnings drive shares in Chinese e-commerce giants higher. Alibaba in the green. That's despite missing the mark, though. Our quarterly profit at JD.com nearly doubles. And the World Health Organization declares a global public health emergency for the second time in 2 years over the viral infection Mpox. We'll discuss the implications with vaccine maker Bavarian Nordic. That's happening at 7:30 CET. Stay tuned for that one.
There's no doubt it was a quieter week for markets, not as noisy as last week, but somewhat welcome. And in terms of what we saw this week, in sporting terms, a high dive here, reverse somersault, a couple of twists thrown in, and a perfect entrance into the pool from the 3-meter board.
Lovely pirouette almost at the end there as well, right?
Yeah, so with the data yesterday really bringing home how difficult this has been for markets to try and execute from here. We saw a trio of different points, I think, for the market that were absolutely key to reassure a lot of investors. And the number one, it was retail sales. The fact that we had a bounce of 1% in July seasonally adjusted, it suggests that how on earth is Main Street holding up if we are going into recession. So very important read in that you're still seeing health in the consumer. The benefits side, the fact that you had weekless jobless claims coming in slightly below consensus, so no exact stampede to benefits, which suggests there's some health in the employment market. And finally, Walmart, the reading from the corporate side that you've also got health taking place in terms of those shopping habits. And their language was very strong in the earnings report yesterday, enough so that the stock took off to a record high. So 3 important markers for a lot of investors yesterday, because I think they're still in that view. We've bounced back, but could there be more volatility ahead?
Yeah, so the easing is still happening, right, in that labor market, in retail consumers as well. But it was just showing again that the world isn't collapsing, that the US isn't necessarily falling off a cliff here, and that things are fine. And I think for me, while retail sales was very important to the market by the seams of it, I actually thought that the initial claims numbers was actually more pivotal, just because of the swing you saw after the unemployment numbers, of course, that really created a massive pivot in the market last week, Monday. So to get that unemployment benefits dropped 7,000 to that seasonally adjusted 227 versus the 235 that was expected. I think for me, that was the number that actually reassured a lot of investors to say, look, we're actually fine, even on the element that the Fed had been speaking about, which is labor, which is the wider economy. We're actually, slowing, but at a gradual pace. Good enough for that slowdown.
It certainly helps with aftershocks on markets at this stage. But the question is, could there be still more to come? And I think interesting to see the rotation that took place on markets this week. They seem to be picking up other areas where there'd been a stronger sell-off, but markets went back there first. Not necessarily to technology. That's really been a back end of the week trade where investors have scooped up some of the tech names in trade.
You talk about a very fascinating subject actually there when you talk about those tech shares. So, and I'll focus on them now as well, because that was really the segment that we thought a lot of investors actually rotate out of, right? And that was the key element of rotation. We had actually just seen that rotation come into play. We thought, okay, the small caps and maybe even just some of the other value stocks would perhaps be the focus area. Well, guess what? The tech stocks are actually up around 5%. In fact, let me get that number quite correct for you then. It was another ascent for tech shares, and they're up over 7% this week. All 11 sectors from the S&P 500 are actually in the green as well. So significant gains there. And if you think about it, that means you've basically gotten back everything you wiped out from last week, Monday, for the most part, when it comes to just the tech stocks on their own. So that has been quite pivotal to this market movement. We're back towards 17,600 on the NASDAQ composite, a big gain of 2.33% there, with the S&P 500 also moving higher. In fact, so much so then that one needs to actually look at both the S&P 500 and NASDAQ, which are both up for a sixth consecutive session then versus yesterday. And of course, across the week, 5% higher for the Nasdaq Composite, the S&P 500 as well, up around 3% for the week. That again clearly tells you that it's been a very positive week across the board then, and that rebound that we had been seeing towards the latter part of last week, well, that clearly has gone on. And we still have today still to go. Of course, we do have some earnings still on the deck. Then again, a key factor to look at that retail sales number as well. So a little bit of a consumer trend still to look out for today. On the treasuries front, well, you saw those yields actually rush a little bit higher on the back yesterday of that, what is an easing of recessionary fears really on the back of the retail sales numbers, which did come in better than anticipated. And then you also got that initial jobless claims number then coming in, reassuring investors that that jobs market isn't necessarily falling off a cliff then, and the wider economy, while slowing, isn't necessarily easing to the point of a recession in play here. And that's why you're seeing recessionary risks perhaps come off so slightly. So the 10-year note still below the 4% mark, but 3.9 is where we're at there, having risen even yesterday to around 3.95. Back above 4% firmly then for the 2-year note at 4.07 there. That's a 17 basis point shift between the two now, as you can see, with recessionary questions. Yes, obviously still in play, but key question marks is that has that eased, and it certainly does look so. On to the currencies then, the dollar is hovering near a 2-week high then versus the yen, especially having seen what was the biggest one-day gain in 4 weeks. So you're seeing dollar yen now at 148.93, just below that 149 mark. You're seeing even more weakness perhaps then just a little bit this morning versus the yen there for the dollar. In fact, now this came after what was firm U.S. economic data yesterday. That initially did push up the dollar then as well, but you're seeing it perhaps a little bit more weakness or pull back a little bit from those marks from yesterday. 128.71, we headed back towards 129 it seems then for sterling. Of course, the Bank of England will be considering rate cuts as well. Positive GDP numbers, CPI better than anticipated as well, so a stronger UK economy by the seams of it there, with euro dollar, so 109.81 the current mark. And if we quick look at your Asian market, Japanese stocks here leading the Asian trade, more than 3% higher so far in this Asian market. Nikkei 225 gaining more than 1,100 points so far then this morning. The Hang Seng post-lunch session is also doing very well. They're up nearly 300 points, 1.61% to the good this morning. Shanghai Composite across the flat line, but still finding some positivity there. Just to note, JD.com up over 6% after reporting, forecast beating earnings on that side. Then you're also seeing the Nikkei actually poised then for what is an 8% gain this week if it does continue across that trajectory. So very interesting to look at that one there. Karen.
Billy, thank you. US retail sales jumped a percentage point in July, rising by the most in a year and a half and surging past expectations of a 30 basis point uptick. Sales ex-autos and related items also came in significantly higher than expected, capping a week of key July data points for the Fed. Traders pulled back further on bets of a 50 basis point cut on the news, with the CME's Fed Watch tool showing the implied probability down almost 7 percentage points overnight at 29.5%. This is the latest weekly job claims figure, fell more than expected to its lowest level in a month at 227,000. St. Louis Fed President Alberto Mizellem became the latest Fed official to indicate he could support a cut at the central bank's next meeting. Mizellem has said that recent data has bolstered his confidence that inflation is returning to target and that the time could be approaching for an adjustment to moderately restrictive policy. As I mentioned, Walmart shares hit a record high yesterday, surging more than 8% at one point after the grocery giant raised its 4-year sales and profit forecast for the second time this year. The retailer now sees annual adjusted profit per share coming in as high as $2.43 this year after beating on its second quarter EPS figure. Shares in Target, Dollar Tree and Dollar General also closed higher. Let's get to Melissa Minkar, who is the Director of Retail Strategy, CI&T. Melissa, thank you very much for joining us today. The numbers coming through on the retail sales and combined with Walmart paint a picture of the Main Street intact at this stage. But that said, we've seen issues across the space, the likes of Home Depot, Amazon, athleisure wear companies, some of the restaurant chains, all warning about a softer consumer. So how do we think about this in a 360 view?
Yeah, thanks for having me. Hi. I think the key here is that saying of, does a rising tide lift all boats? And in the context of retail, the answer is no. just because some retailers are seeing positive growth and seeing consumers come back to them, it doesn't mean that's going to be the case for every single retailer. It's really about which retailers can resonate with consumers during these times where they still feel extremely cost conscious.
Melissa, that is an important point, the nuances here that we're seeing in the sector and what it spells for the economic cycle, because we've had a market that had a wobble last week of concerns of recession. What we're seeing in the numbers today doesn't suggest we're right on the cusp of a recession, though, does it?
No, it definitely doesn't. And I think, the dialogue has been going back and forth and teetering and saying, maybe we are, maybe we aren't. But the reality is, I do think we've missed it, which is great. I think the key is just how consumers feel versus how they're spending. They will tell you that they feel like they're in a recession, but their spending doesn't necessarily reflect that. They're still spending where they want to spend. So I think we're safe because consumers are still spending despite how they feel.
Melissa, good morning to you. I mean, what do you think is keeping spending up in some areas of this market? And I mean, I know you just made note of how they're spending where they want to spend, but what is keeping the consumer spending in those areas? I mean, a lot of the buffers have certainly been done away with, whether it be the high pandemic savings, credit cards being maxed out. It just feels like perhaps labor is the only thing keeping markets or spending alive. Is that the case?
I think a big part of it is just retailers have been able to offer promotions. And they weren't really able to do that the past couple of years because their demand forecasting was in crisis and because of the pandemic and, manufacturing issues. So this year, retailers have been able to offer the correct discounts on the items that consumers actually want. And consumers are hyper reactive to those discounts because they're so cost conscious. So they're spending more because they want to be saving more.
Yeah. Well, I mean, if that's the case, then why has McDonald's not been able to make it? Why has Starbucks not been able to, I suppose, take advantage of those discounts? Because both of those also incurred discounts, but not necessarily being able to thrive on the back of their earnings picture.
Yeah, I think there's a couple reasons for that. One, that's in the QSR, the food space, and consumers can be really strategic there and say, I'll actually eat at home. I'll go grocery shopping instead. So there are financial alternatives that feel more savvy and more cost conscious, even when those retailers or those brands and restaurants are able to push promotions. And the other aspect is, I think, particularly for brands like McDonald's that are already operating at kind of a discount positioning for consumers, they may be less sensitive and less reactive to those promotions because they're already kind of table stakes and expected for those brands. Where they've been really excited is maybe from some of the retailers and brands that weren't previously offering such impressive discounts, or in the case of Walmart, where they just know they can consistently get the lowest prices in contrast to the alternatives. But there are alternatives to QSR, which is, cooking at home.
Melissa, it's certainly nice to see the consumer win for a change after what seems to be a series of price gouging events in some areas. But when it comes to the promotions, what does it mean in terms of profitability? Because for me, when I look at some of the good side, the promotions sort of take into account the increases we had on inflation. That's come off. You've had the discounts that really taken us back to levels that we had before some of the price escalation. So this must take a hit to margins that you're seeing at some of the goods companies, but even to some of the restaurants that are now getting promotional in the activity.
Yeah, that's a great point. I mean, I do get excited, like you said, when the consumer kind of wins here. And I actually do think that retailers win when consumers win. And that's just because they're able to drive more volume. So what they maybe, lose in price, they do make up for with that volume, especially because consumers have this mindset now where they'll spend more to save more. So they'll kind of load up that basket, make it larger, which kind of compensates and rewards the retailer for giving them some savings back too.
Melissa, you've also had a change in leadership at some of these brands, haven't you? I mean, Chipotle, that is a significant move to Starbucks, of course, then that we have seen there. How does that change things along? And of course, even Victoria's Secret new CEO, does that change things along at all?
Yeah, I definitely think it will. I hope it will. I think that's, a lot of times the goal when you do a change up like that is to create change throughout the organization. I'm especially excited about the Victoria's Secret change up just because I do think that that brand has a lot of potential. And I think it could have a similar comeback story to some of the other retailers that have been kind of alongside of it, like the Abercrombies or the Gaps that are really, previously popular with millennials and have that kind of nostalgic brand heritage and also have some timeless product and ability to resonate with consumers when they really put their minds to it. So I think and I hope, this is some retailers and brands taking advantage of this crucial inflection point and understanding that, going back to that analogy, if they want this tide to raise their boat, they have to kind of, change the materials a little bit.
Melissa, it is a crucial time, isn't it, as the consumer is getting choosier here and watching what they spend, so executing is incredibly important. What is the role of Gen AI at this stage? Because it feels like the insights you can get, the analytics means that you're more targeted. So if you've got the right brand, you can get in front of the consumer, you can execute on sales. But how would you describe what we're seeing in terms of the industry adoption and the relevance at this stage?
Yeah, absolutely. So there's AI and there's Gen AI, and AI has been used in the retail space for a little bit over a decade at this point, but it's been a lot more behind the scenes. And now that we've kind of socialized that term in the space, consumers are a little bit more used to it as well, which means it can come to the forefront and drive a lot more cost savings for retailers. So for AI, what that looks like is it can help with price fluctuations and more strategic pricing, which in turn benefits the consumer and the retailer. It can help in driving efficiencies from a logistical perspective when it's, throughout the supply chain and really optimizing that. And it also drives efficiencies when it comes to data analytics, finding patterns and signals in the noise a lot faster. And then generative AI is a little bit different. That's definitely a newer term and still not as familiar for consumers. But what that can look like in terms of how retailers can leverage it is they can create smarter search opportunities and capabilities for consumers. So consumers can be typing in natural language queries that are really, really specific. So for example, they could say, I'm looking for a reception dress for my wedding. I want it to be, T length, and I want it to be 70s style. And a retailer has a higher likelihood of recognizing those terms through a generative AI search engine and can really help the consumer get to exactly what they're looking for. Generative AI is also being leveraged in marketing text and developing copy. It's a more kind of creative engine, hence the generative piece of it. But it's really ultimately going to help consumers navigate to what they're looking for faster, more efficiently, and really facilitate the fact that consumers are on this mission. So many retailers are starting to implement generative AI in their search functionalities and throughout their marketing descriptions and product details as well, to just make for a more creative, engaging, and hyper-personalized retail experience for the customer.
Melissa, we know it's the middle of the night then in Chicago as well. So thank you so much for staying up for us and giving us really a whole lot of great detail on this segment of the market, a very interesting one. And hopefully we can chat to you again very soon. Melissa Mpox is the Director of Retail Strategy at CI&T. All right. Let's take a look at what's happening then with regards to the rest of the show then, of course. Coming up, shares in Mpox vaccine maker Bavarian Nordic jump as Sweden confirms the first reported infection of the strain outside of Africa. We'll speak to the CEO of the Danish company later this hour. Also, Hong Kong shares of Alibaba brush off a first quarter revenue miss. We'll have the details. That's coming up next. And later, the Premier League returns tonight. That's after a summer where English clubs once again look to tap into lucrative US market. We'll speak to CLV Group CEO, that's Neil Joyce. That's happening at 9:30 CET. Stay tuned.
CNBC Connect is back in Bangkok, Thailand. Join the world's top entrepreneurs and C-suite executives for an invite-only leadership retreat. On the agenda, powering innovation and growth in Asia. Is AI transforming industries and creating opportunities? And get insights on building sustainable and resilient businesses. Be part of Managing Asia Live. Network and join an interactive brainstorm session. CNBC Connect, powering innovation and growth in Asia on September 4. Register now.
Breaking news out of Thailand at this hour, and it is a name that many of our international viewers would be very familiar with, Shinawatra. And we have now return of that very strong political family in Thailand with the news that Paetongtarn Shinawatra has now won enough votes required to become Prime Minister and now becoming the youngest in Thailand's history. So 37 years of age, spent the week on the hustings while visibly pregnant as well. So that was a fascinating turn of events, and certainly welcome to see. In terms of the relevance here, she is the daughter of the former Prime Minister Thaksin Shinawatra, who of course has been so instrumental in party politics and running the country over the years. Even when he wasn't in office, some commentators thought he was very much behind the scenes pulling the strings. So the news flow here that she effectively won 153 votes at the midway stage. 248 were required to become Prime Minister, but now has won enough votes to take up that role. Arabile.
Well, it might not have been the ECB, BOE, or even the Fed, but it has been a busy week for central bank decisions. Of course, it is all ahead of the Fed's September decision. As investors look to what could be a pivotal time then, and what that could mean then for global monetary policy and its outlook. Sylvia has a little bit more of the details. Sylvia, still a lot of moves despite it not being the major central banks.
Exactly. So even though we haven't heard from the Federal Reserve yet in terms of cutting rates, other central banks around the world have embarked on this rate-cutting cycle. You have some of the latest announcements to my right. For instance, this week we've heard from these 4 central banks. And indeed, proof that this new rating cycle has begun is these decisions from New Zealand, Philippines, as well as Namibia. Let's start with Wellington. The governor in New Zealand actually said that the central bank is taking the foot off the brake with its 25 basis point cut. He added the decision was, quote, borderline emotional, having led a campaign that added 525 basis points in rate hikes. Meanwhile, in Manila, they also announced a 25 basis point cut to 6.25%, making it one of the first Asian banks to cut rates apart from China. And you have one of the quotes from the central bank governor to my right as well. Analysts at ING actually said that it was, quote, a brave call to cut rates at this moment because it comes before the Fed has done so. Now, the governor said he expects meaningful Fed easing to come.
The numbers have been weak, not weak enough to suggest a hard landing, but weak enough for FOMC cuts. Maybe as much as 100 basis points this year, and a similar magnitude in 2025. I think it might put a bit of pressure on the peso because the differential will widen if the easing is as much as we expected, but what we call the pass-through, the impact of exchange rate depreciation on Philippine inflation is very modest. So we don't worry too much about a depreciation of the peso.
But there's more. Namibia cut rates by 25 basis points to 7.5%. And the central bank also lowered their inflation forecast for the year due to an appreciation of the dollar as well as moderation in crude oil prices. And the governor made the comment that real interest rates have increased and therefore signaling an effective tightening. So in the moment here to actually change the policy stance. Now, the outlier this week was actually the Central Bank of Norway. They kept rates on hold. However, expectations are that a cut is on the cards before the end of the year. But let's see what's going to happen. There's a lot of pressure on the Norwegian Central Bank at this stage as they are seeing their currencies significantly depreciating against the US dollar so far this year, guys.
Thank you very much for that, Sylvia.
Yeah, I think this is very interesting then ahead, of course, of the Fed. Next week, of course, have Jackson Hole happening with the Fed anticipated to make a few more comments as well with regards to where rates might go. And markets now pricing in just a 25% chance of a 50 basis point cut from the Federal Reserve next month. Let's remember that just over a week ago, the notion here was that 50 basis points was more than likely. And now we've pared that back immediately in the week. And I guess, yes, it is all data dependent, sure. But it just kind of shows the amount of panic that was actually in place in this market on the back of that jobs number.
It tells you how difficult it is for other central banks to calibrate around what the Fed could be doing, because if you're talking about a 50 basis point move and recessionary signals, that is quite something different to a guided path lower 25 and the US economy is still intact. And obviously a lot of these economies have their own inflation issues that they've battled over time, and now they have started to turn around towards this cutting cycle. So whether you get undermined by a Federal Reserve or you get helped in terms of policy action by the central bank is all important in terms of execution, even though they are independent central banks here.
There were many years where people thought that a lot of other economies move depending on the Fed, whether it be up or down, right? Now it feels like a lot of that has actually just split off, and they just think to themselves, well, we'll see what the Fed does. I mean, let's remember when the ECB cut in June, it was out of step completely with the Fed.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.